Anybody would be better than Jay Powell. No, he's causing us a fortune because he keeps the rate way up.
President Trump has made no secret. He wants Fed Chair Jerome Powell gone. And markets have been reacting when Trump lobs verbal grenades over Truth Social. Pundits are even whispering about a shadow Fed chair guiding monetary policy behind Powell. But who's poised to become Powell's replacement?
I know within 3 or 4 people who I'm going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible.
How will they approach their mandate, and how will their actions affect the market? We're discussing it all in today's video. This is one you cannot afford to miss. Now, before we begin, there's something I need to make absolutely clear. Although we will be looking at some market odds today, I am not a financial advisor, and nothing in this video should be considered financial or investment advice. This is purely educational content meant to inform you about the markets. If that sounds good to you, punch those like and subscribe buttons, smash that notification bell, and let's get into it. So, Trump has said he's considering 3 to 4 candidates for the next Fed chair. But who are the contenders? Well, one helpful development this cycle has been the growing maturity of betting markets, which have consistently helped distill scattered information into a clearer picture. But before we have a look at the market's prospective Fed chair nominees, we'll first need to provide some context. At the time of making this video, Polymarket gives only a 34% chance that no successor is announced before December, with Powell's term coming to an end in May 2026. The pricing of that single market largely explains the current drama. In recent history, the typical lead time between the announcement of a Fed chair successor and the candidate assuming office has been about 2 to 4 months. If Trump were to name someone very soon, as he said he would, that would be as much as 11 months ahead of the transition, far from normal. But so what? Well, markets are forward-looking, so traders and investors will begin pricing in the newcomer's policy leanings and treating Powell as a lame duck, with his remaining actions carrying less and less weight as his departure next year approaches. Believe it or not, but it was actually Trump himself who named Powell in November 2017, with just 4 months left in Janet Yellen's term. If Trump stays silent, which let's admit he's not known to do, Powell retains relevance. But the guessing game drags on. So, what do the betting markets have to say? Both Polymarket, crypto's favorite betting market, and Kalshi, a CFTC-regulated competitor, consistently give 4 particular individuals leading odds. Fed Governor Chris Waller, Treasury Secretary Scott Bessent, former Fed Governor Kevin Warsh, and Director of National Economic Council Kevin Hassett. We should note that there is some divergence between Polymarket and Kalshi, which reminds me, these odds are sensitive and they update every time Trump opens up the throttle on Truth Social. Nevertheless, this gives us a picture of the leading candidates. So let's have a look at each of these contenders and consider what impact they may have on the financial markets. We begin with Christopher Waller. Currently considered by many pundits as the favorite, Waller typically leads Kalshi's betting market for the next Fed chair. What's more, he's the only contender who can actually shape policy today in his position as a Fed governor, which he has held since 2020. Waller used a speech last month to argue that the Fed should look through any tariff-driven pop in prices and still aim for rate cuts later this year. Bloomberg picked up on the headline, stressing that Waller sees a clear path to cuts despite headline inflation risks. Within 15 minutes of Waller's remarks, the 2-year Treasury yield dropped 20 basis points, a very sharp swing. And that instant reaction partially explains why some analysts now refer to Waller as Trump's shadow Fed chair. Pundits are voicing concerns over Trump's public weighing of candidates, claiming the early nomination talks look designed to let a chosen successor guide expectations while Powell still occupies the big office. If Waller is that successor, the process has already begun. Waller's policy DNA certainly tilts dovish, but also pragmatic. He has spent much of the past year insisting that supply-side shocks, whether energy spikes or the renewed tariff barrage, tend to wash out of the inflation data faster than people expect. In the same speech we referred to earlier, he warned that tariffs could nudge prices higher in the second half of 2025, yet he framed that pop as temporary and said stable, long-run inflation expectations are the real North Star. The market translation is simple. Waller will tolerate a short-lived bump in inflation measures if it means safeguarding growth and employment, and he would likely lean toward rate cuts the moment the labor market starts to wobble. For bonds, that likely means lower short-term yields, and if he does become Fed chair, a flatter yield curve overall. And that's because the markets would expect the Fed to cut rates more quickly than the long-term expectations for growth or inflation would decline. For currencies, it signals a lighter dollar, and June's knee-jerk drop in the DXY after Waller spoke previewed exactly that. Stocks and crypto do like the combination of falling real yields and a softer dollar, so a Waller Fed would be expected to provide a natural bid for crypto. But Waller is not a strict Uber dove. In early 2024, he backed Powell's decision to pause rate cuts, arguing that inflation, particularly in services, remained stubbornly high. Earlier this year, he once again supported a decision to wait on cutting rates. And that willingness to toggle from patient to proactive gives him credibility with market participants who may be worried about a purely political appointee. Still, some critics do argue that the prospect of a Trump nomination for the top job may already be influencing his decisions, hence concerns over the Fed's future independence and a current shadow chair. One could actually argue Waller's level of real-time influence is the definition of a shadow chair, and if Trump makes the appointment official, the market will merely accelerate a trend it has already begun to price. Christopher Waller is a name you need on your terminal alerts because, in effect, he may already be driving the bus. Whichever way you look at it, though, Waller would certainly have a dovish tilt that tends to favor crypto. And most importantly for crypto traders is the speed with which Waller's words would translate into price action. And if you want to make the most of that price action, then check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and cashbacks on deposits of up to 75% on the best crypto exchanges around. These deals won't be around for long, so take advantage of them ASAP using the link down below or by scanning this QR code. Now, back to our Fed chair candidates. Next, we have Kevin Warsh, a familiar fixture in every round of Fed chair speculation since the 2008 financial crisis. A former Morgan Stanley banker, Warsh has sat on the Fed board from 2006 to 2011. He has been critical of the Fed, claiming it has wandered out of its lane, cushioning bad fiscal policy with easy money. I think that introduction gives you a clear idea that Warsh's monetary policy leanings differ somewhat of those of Chris Waller, with Warsh being consistently more hawkish. Nevertheless, at the time of making this video, Warsh is a favorite to replace Powell according to Polymarket. Warsh has warned that the Fed's recent statements imply impaired credibility, and that policymakers are still relying on stale, revised later data to steer a supertanker economy. Warsh's broader philosophy on monetary policy is straightforward. Rate cuts should be avoided until inflation is firmly on a sustained path back to target, even if that means accepting weaker near-term growth. In contrast to Waller's dovish comments moving markets, traders seem to take Warsh's warnings on potential central bank blunders in their stride, being little affected. Granted, Waller is a sitting Fed governor while Warsh is not. Even so, trading desks still recognize an iron fist undertone in Warsh's rhetoric. Relatively stronger real yields, a sturdier dollar, and tighter liquidity would all tilt stocks and crypto toward caution, even if such moves don't always materialize based on his current public comments. Warsh's critical stance meshes neatly with Donald Trump's public frustration that the Fed waited too long to tackle inflation in 2022. But It clearly collides with Trump's current push for rate cuts along with the one big beautiful bill and its potential to increase the US deficit. Warsh has repeatedly argued that low rates and a swollen balance sheet blur the line between monetary and fiscal policy, encouraging unsustainable levels of government spending. The implication of a Warsh chairmanship would be stark, particularly as traders don't seem to be pricing that in with as much likelihood as the betting markets would suggest. A sharp turnaround in expectations, if Warsh's odds were to significantly rise from here, would have a more dramatic market impact as a result. Should Trump actually choose him, expect an immediate repricing, a stronger dollar, growth stocks down, and a scramble out of risk assets. For crypto, this would mean the pricing in of more restrictive policy rates well into 2026. Funding costs would remain pinned at higher levels, tempered risk sentiment would weigh down flows, and higher real yields would offer competition to Bitcoin's digital gold narrative. Doesn't sound great for bulls. However, it's worth noting that some analysts have asserted that Warsh is on the short list precisely because floating a hawk keeps bond traders honest. It reminds them that dovish outcomes are not the only outcomes on the table. Even the threat of a Warsh appointment can stop the cut-now crowd from getting too far over their skis. Whether or not that outlook is accurate, Warsh is the candidate who would test every conviction you have about the trajectory of the market, and he's only one Truth Social post away from becoming the market's base case. The next prospective nominee in the running is Scott Bessent. As you're likely no doubt aware, Bessent is already running the US Treasury and, by extension, half the plumbing that keeps the global dollar liquidity alive. During a Fox Business interview last week, host Maria Bartiromo pointed out that Wall Street has Bessent near the top of the shortlist to replace Powell and asked directly whether he would accept the chair. Bessent ducked the question, saying he already has, quote, the best job in Washington, but would, quote, go where the president thinks I am best suited. Bessent has stated that he expects a rate cut, quote, certainly by September. Coming from the man who oversees the US Treasury, that reads less like a forecast and a bit more like marching orders. Bessent has also cautioned that if the Fed defers a cut at its late July meeting, policymakers may have to make a larger move in September. He framed the bigger September step as a consequence of waiting rather than a prediction of any specific magnitude. Bessent essentially views things like this. When short-term Treasury rates rise above long-term rates, an inverted yield curve, it means the Fed is being slow to adjust. He notes that the 2-year Treasury has signaled every big Fed shift over the past decade, and it's flashing a warning right now. Specifically, the yield on the 2-year Treasury is lower than the Fed funds rate, which is sending a strong signal to the Fed to cut, but the Fed isn't cutting. To avoid a rise in long-term yields, Bessent plans to hold off on issuing more 10- and 30-year bonds for the next few quarters. Instead, he'll rely on short-term Treasury bills, which are cheaper for taxpayers and keep long-term interest rates from rising further. Analysts have started to call the stance a Treasury put, arguing that by skewing supply toward the short end, he can hold Treasury yields down even if the Fed does drag its feet. Since interest rates are priced off Treasury yields, this has the effect of lowering interest rates, just like the Fed. Beyond bond issuance tactics, Bessent is also pushing complementary regulatory tweaks. A Reuters reports offer analysis estimating that relaxing leverage ratio rules for banks, an initiative Bessent backs, could knock 10 to 50 basis points off the 10-year yield by itself. And that's 0.1 to 0.5% for anyone wondering. All of Bessent's stances essentially boil down to one word: liquidity. Cheaper funding at the front end, a flatter curve on the long end engineered by Treasury short-duration issuance tactics, and the promise of regulatory tweaks that free up bank balance sheet capacity. And this all amounts to a risk-on cocktail that has historically pushed stocks and crypto up. Bessent's critics say that his bias is obvious. A Treasury secretary would welcome lower rates to ease a debt service. He counters that the 2-year yield is a market consensus forged by millions of price makers and dismisses accusations of political spin. Bullish-leaning traders do like the symmetry here. A liquidity-friendly Treasury chief who becomes a liquidity-friendly Fed chair could deliver the 1-2 punch that reflates everything from junk bonds to JPEGs. The bottom line is that Bessent's words already move markets, whether he's referring to treasuries, tariffs, regulation, or interest rates. If Trump hands him the Fed chair, those nudges could turn into a full-blown policy drive. And for crypto holders, that could feel a lot like the opening bell for a big leg up. Beyond the three candidates we've discussed so far, betting markets also give Director of the National Economic Council, Kevin Hassett, considerably high odds. A supply-side evangelist in Trump's bullpen, 2 weeks ago, Hassett told CNBC there was, quote, no reason at all for the Fed not to cut rates right now, arguing that, quote, if they see one more month of data, they're going to really have to concede that they've got the rate way too high. That line, repeated across US media, lit up Hassett's odds as the next Fed chair on Kalshi, pushing Hassett's contract above 22% and making him another pure dove option that Trump is likely to consider. Hassett's playbook marries fiscal fireworks to easier money. He boasts that Trump's one big beautiful bill will unleash major GDP growth, and he frames rate cuts as the lubricant that keeps that engine from seizing. In practice, trading desks map his arrival to a weaker dollar, a snap steepening of the Treasury curve once the front end dives, and a market-wide rally for stocks and crypto. A Fed that explicitly prioritizes growth over spotless price stability is the starting gun for a continued trend in the current bull run for stocks and BTC. Yet, prediction markets refuse to give him the crown outright. Some pundits argue that while Hassett tops odds on some Kalshi boards, institutional traders still worry about his thin monetary resume and the optics of promoting a sitting White House advisor straight into the Fed's most powerful seat. Given that outlook for Hassett, any names further down the list begin to fall under the category of wildcards. David Malpass arises here as a dark horse, a former World Bank president and longtime Trump economic advisor who says the Fed is behind the curve on cutting interest rates. In late June, he issued a Wall Street Journal op-ed arguing the central bank's models depend on slowing growth to avoid overheating, a mindset he calls outdated. That growth-first rhetoric does echo Trump's, which explains why Fox News' shortlist still slots him among potential picks. Malpass isn't lighting up the betting boards, his odds hover in the low single digits, but if Trump wants a loyalist who'll cut hard and talk up a growth-focused Fed, the market would have to reprice in a hurry. Inside the Fed, Governor Michelle Bowman is quite the dissenter. She told an AP roundtable that she could support a July rate cut if inflation stays subdued, distancing herself from Powell's wait-and-see approach. Bowman's odds hover near 1% on betting markets, but her presence matters. Every speech she gives normalizes the idea that more sitting governors now lean dovish, turning up the heat on Powell and giving traders another reason to fade the dollar on any hint of weak data. So while Hassett holds some solid odds, there are certainly other candidates in contention. And if that happens, the recalibration across yields, Dixie, and crypto could be even faster than the betting boards can refresh. So we've walked through 4 names that matter most. Fed Governor Chris Waller, the inside dove whose talk of rate cuts already sways the 2-year. Kevin Warsh, an inflation hawk whose profile certainly clashes with the other potential nominees. Treasury Chief Scott Bessent, eager to steepen the curve with rate cuts. And supply-side champion Kevin Hassett, ready to marry big stimulus to easier money. Any of these 4 could be unveiled very soon, possibly undermining Jerome Powell as he finishes out his term in the coming year or so. Then come the wild cards. They're long shots, but in Trump world, long shots have a habit of hitting the board. While it seems that Trump is far more likely to go with one of the more dovish names out of these, nothing is certain. The only certainty is that the announcement itself, or the choice to tease it out and keep everyone guessing for now, will offer bursts of volatility. So, who do you think will be named the next Fed chair? Let us know in the comments. And if you enjoyed that video, then you'll enjoy our latest one right over here. And if you're not subscribed to the channel, you can do that right over here. This is me, Nick, signing off. Thank you guys very much for watching, and I'll see you again soon.